Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. In today's session of Daily Talk, we are going to talk about this pharmaceutical giant Merck and Company. It released its first quarter earnings for the fiscal year 2024, and in it, it has reported fabulous revenue growth and equally impressive bottom line growth, where its net profit has gone up significantly on account of higher realizations from the sales, and also operational efficiency is helping it post better margins. So overall, we can say that Merck is in pink of health. This company which helps patients regain their health, which brings relief to the patient, is also having its own health in a best of condition. It is well poised for further growth. It has strong pipeline of products, and it has been innovating, spending heavily on the R&D to stay ahead of the curve and innovate to discover newer medicines to help patients alleviate their pain and suffering. So in this backdrop, we are going to consider its earning statement. As I said, its top line and bottom line have shown remarkable growth. The sales have gone up to $15.77 billion from $14.48 billion a year back. That's close to 10 percentage point growth in a single year in the revenue. And what is more impressive about the company's revenue is that it's happening in a very defensive sector. The pharmaceutical companies don't really see the revenues change significantly in span of a year unless there is a development, there is revenue growth which is driven by newer products which were launched in the market, or if there is a higher demand for its existing product. So in this backdrop, I feel we have to consider its operational efficiency as well, because if you look at the growth which is there in the revenue, which is close to 10 percentage point, I think it is much more closer to 9 percentage point if you want to be more precise. But then if you look at its net income, the net income has gone up to $4.76 billion from $2.82 billion. That is a growth of around 70 to 80 percentage point, where its EPS has gone to now $1.88. This is happening because if you consider the cost of sales, even though the revenues have risen, the cost of sales has declined. Its selling, general, and administrative overheads remains roughly the same, and there is a bit less spending on the R&D. So all these factors have helped it significantly expand its net income. The taxes are not very different. The main difference is coming in this cost of sales, which is lower, even though the revenues are on the higher side. So this has helped the company post one of its best results. Now, if we consider the balance sheet, it remains in a pink of health. As I said in my introductory remark, there is nothing to be worried about for its going concern. It's well positioned for not only survival but for sustained growth in the coming quarters, in the coming years. The consolidated statement of cash flow is with us. From the net income generated of $4.76, after adjusting for other operational items, we had the net cash flow, operating cash flow of $3.09 billion, which is also significantly up from $1.33 billion a year back. Cash flows from the investment activity, there was cash outflow of $1.36 billion. for the investment purposes, of which capital expenditure took away $861 million, and other big spending was on the acquisitions of Harpoon Therapeutics Inc., which resulted in the outflow of $746 million. From the financing activity, there was outflow of $2.8 billion. Of that, dividend paid to the stockholder contributed to the highest cash outflow item. Payment on debt totaled at $751 million. So you can see that the company's cash outflow is in a robust situation. It has paid significant amount of its profit to the shareholders in the form of dividends. So that has resulted in its cash and cash equivalents declining by $1.23 billion. If it were not to spend so much money on the dividends, I think it would have seen its cash pile rise. But instead of keeping the cash on books, it has decided to reward the shareholders and paid them handsomely. Now we go to the technical side of the story. Before that, let us see if we have the forward guidance for the second quarter or not. As far as my knowledge, the forward guidance is on the positive side. Whether it is included here or not, that is another question. The company is expecting its strong momentum to help it in record better revenues, record better margins in the coming quarter as well. And this has also kept its stock momentum bullish for a while now. Now we turn our gaze to the technical side of the story. Here we have this stock price of the Merck moving sharply over last couple of quarters. In 2 quarters, it has gone up from 122 to 132, and now on these elevated levels, it is going a bit sideways. I feel it has seemingly run its course, and even though there has been strong earnings report from the Merck, there is more likelihood of it spending time in a consolidation phase rather than seeing a runaway move on the higher side. Since its valuations have risen sharply over last few quarters, particularly last few weeks, I am more likely to expect it to consolidate on these higher levels, consolidate its recent gains, and not move sharply in either direction. So that is the expectation. And keeping up with that, if we have to trade in very short term, if your time horizon is just for a couple of sessions, I feel watch out for the immediate high of 132.7. As long as price remains below that level, we have reasons to believe in the resistance, which is keeping its upside cap. If you consider the recent price move, it reached this 132 level a week back, but last 4-5 sessions haven't seen it be able to break past the immediate hurdle. The resistance has kept it consolidating closer to this 132 mark, and I am not expecting this to change anytime soon. So as long as it remains below or close to this 132 mark, I feel we have reasons to believe in the possibility of further decline in coming sessions. So if you want to trade, the simplest way to do is go by the resistance, and if it is trading close to resistance, what we do, that's the simple answer. We look for short selling opportunity. Your best bet can be anywhere close to 132 mark, and on the lower side we can expect it to dip further, maybe around 126 125 can be expected over next few sessions if not early. Now we expand the time horizon by changing the candlestick time period to daily. In the daily chart, you can see that it has really struggled closer to this 132 price level. It has spent almost 2 months, more than 2 months after its earnings were announced. It saw this move, a big move to the 130 level from 126, but afterwards it hasn't really gone anywhere. It has been spending time consolidating its gains, and this time around also again it seems to be finding it difficult to cross above these immediate swing high. So in that context, I feel we can target it for short selling and expect it to decline towards immediate swing low, if not further. So that gives us a good risk reward ratio as well, because if you are going to short it anywhere close to this resistance level, the stop loss is not going to be much wider, and we will be in a good position to get at least 1 is to 2 stop loss in these companies stock from the medium term perspective, as its price moves are likely to remain within range over next few weeks, maybe next couple of months as well. Now we have to consider how things are looking like at the longer time frame as well. In the long term, we have this 30 percentage point growth from the fourth quarter of fiscal year 2023 to this first quarter of fiscal year 2024. So you can say that in the time span of around 6 months, its valuations have gone up more than 30 percentage point, and on these higher levels, it has simply adopted these consolidation stance, and unless there is significant breakout from these levels, I feel its immediate gains are likely to be capped. Its upside remains capped around these immediate swing high. And even though the results have been robust, it is expecting further growth in the coming quarters as well. Even in this scenario, I feel we have to be cautious here. Maybe some correction and then consolidation would be a better idea to invest from the long term. Anywhere close to 110 or around that level is going to provide us with better risk reward and ample opportunity to grow further. So that's my outlook looking at the price trajectory over last couple of quarters using these chart where each candle period is defined at weekly. Now it's time for me to sign off for the day. If you have any query or any idea to share, do write to me in the feedback and I'll be more than happy to take the discussion forward. If you have found the session informative and useful for your trading and investment purpose, do like and subscribe to the channel. You will be able to access equally interesting content, equally useful content by me as well as other technical analysts available on the platform. You can leave your queries and get a satisfactory answer then and there. Now it's time to say goodbye. See you next time around. Till then, have a fabulous time ahead.